To choosing a stockbroker to invest. Sabri vlog. Choosing a stockbroker is an important decision when it comes to investing in the stock market. Here are some factors to consider when selecting a stockbroker. 1. Research different brokers. Conduct thorough research, explore different brokerage firms and compare their offerings, fees, services, and reputation. Consider factors such as trading platforms, research tools, customer support, and educational resources. 2. Types of brokers. Full-service brokers. Full-service brokers provide a range of services, including investment advice, research reports, and personalized portfolio management. They typically have higher fees but offer more comprehensive support. Discount brokers. Discount brokers offer fewer services and generally charge lower fees. They provide a platform for executing trades but may not provide extensive research or personalized advice. 3. Fees and commissions. Compare fees and commissions. Consider the fees associated with opening an account, trading commissions, account maintenance fees, and any additional charges for services such as research reports or access to premium features. Choose a broker that offers competitive pricing and aligns with your investment budget. 4. Trading platforms and tools. Evaluate trading platforms. Test the broker's trading platform or software to ensure it is user-friendly, reliable, and offers the features you require. Look for real-time market data, customizable charts, order types, and mobile trading options if desired. Research and analysis tools. Assess the availability of research reports, market analysis, stock screeners, and other tools that can help you make informed investment decisions. 5. Account types and options. Determine account types offered. Check if the broker offers the type of account you need, such as individual accounts, joint accounts, retirement accounts, IRAs, or education savings accounts. Options trading. If you plan to trade options, ensure that the broker supports options trading and provides the necessary tools and educational resources. 6. Customer service and support. Evaluate customer service. Consider the availability and responsiveness of customer support. Look for brokers that offer multiple channels for assistance, such as phone, email, or live chat, and check if their support is knowledgeable and helpful. 7. Security and reliability. Ensure security measures. Verify that the broker has robust security measures in place to protect your personal and financial information. Look for brokers that are regulated by reputable authorities and have a strong track record. Reliability and uptime. Assess the broker's reliability in terms of system uptime, order execution speed, and technical support to ensure smooth trading experiences. 8. Additional services. Consider additional services. Some brokers may offer additional services like retirement planning tools, educational resources, access to IPOs, initial public offerings, or dividend reinvestment programs. Evaluate if these additional services align with your investment needs. 9. User reviews and recommendations. Read user reviews, research user reviews and feedback about different brokers to gain insights into the experiences of other investors. However, keep in mind that individual experiences may vary. 10. Consider your investment goals and experience. Align with your investment goals and experience. Consider your investment objectives, risk tolerance, and level of experience. Choose a broker that caters to your specific needs and provides the support and resources you require. It's important to note that brokerage services and offerings can change over time, so periodically review and reassess your broker to ensure it still meets your requirements.
Thank you for your joining us. Please subscribe, like, and follow our social media channel. If you feel this information will be useful to you or someone else, please share this video. Comments with your thoughts and questions.